Blowouts, a look at two stocks. Whether it's in the form of great earnings or positions getting blown off the books, Brian Bolan gives you the lowdown on what happened.
Welcome to Bolan's Blowouts. I am Brian Bolan, and I am the aggressive growth stock strategist here at Zacks. And we're going to take a look at a couple stocks, one that had blowout earnings and one that's getting blown off the books. All right, right away, we've got Tillys here. It is a company that has reported earnings last night. Today is December 1st. And Tillys had a blowout report. As a specialty retailer of clothing, same-store sales were excellent here. We had comparable sales plus 4.4% for the month of October, and that was way above guidance, which was for calling for flat to minus 4% sales. If we take a look at the screen here, we see that we've got value, growth, and momentum style scores of A. Now, this stock is a Zacks rank number 3 because it was just moved from a number 1 to just downgraded from a number 1 today. But we expect that rank to move higher as earnings estimates are likely to move higher after the most recent beat. We also see in this most recent beat that operating margin moved from 7% to 3.8% from the year ago. So here's the beat, and this is why I really like this stock right now. We see that the number came in at 22 cents, 12 cents ahead of the 10-cent Zacks consensus estimate for a 120% positive earnings surprise. Now, this is the third quarter in a row for a positive earnings surprise. And you can see the last quarter, there was a 266% positive earnings surprise. So I know that Tillys is a specialty retailer, but just what is it that they're selling? If we ride over to the website here, we can see, and I'm already on the men's section for clothes, we can see some nice clothes here, some t-shirts and some jackets. And here it is, what's really driving sales, these flannels. If we take a quick look here at the flannels, all kinds of them, $50 per shirt. Oh boy, these things would look great on just about anybody. Maybe even me if I could get one in scarlet and gray. All right, now let's move on to our next stock, and this is the one that's getting blown off the books. It's Shoe Carnival. Shoe Carnival reported a miss and guided lower in their most recent quarterly earnings. And we can see from the chart here, from the website here, that this is a Zacks rank number 5. That's a strong sell. It also has a growth style score of D. We can see the stock ran up after the election, but then at that earnings report came tumbling down. Today, the stock is up about 6% on a little bit of a dead cat bounce here as a lot of retail names are moving higher, but still a forward earnings multiple of 17 times. As we take a look at what's going on with earnings estimates, we can see that over the last 60 days, the Zacks consensus estimate has moved from $1.60 to $1.49, and next year we also see it moving lower from $1.84 to $1.73. Now, I don't know about you, but Shoe Carnival, just what's going on there? Obviously, shoes are somewhat hot, right? But on the conference call, they said that it was seasonal factors that led to the miss and the lower guidance. So I went over to the website. Let's go over there and take a look at what's going on. We see that there's the buy one, get one, a big promotion here for the holiday. But what do they lead with? Right away, we see boots. They just said that seasonal factors were the problem, but yet boots are right there front and center on the website. Now, if we scroll down a little bit further, we see something more. Crocs. You know, this isn't 1996. I mean, Crocs are out of style, right? At least from what I understand. And then finally, what else do I see? I see Emerald. This isn't a cooking site. This is about shoes. And look at these things. I don't know. This is definitely a position I want to be blown out of. So that's it for this week. Next week, we'll be back with 2 other stocks that are either posting blowout earnings or getting blown off the books.